Hey guys, JPA Trades here, and as promised, I'm going to be going over the Lululemon play from last week. But before we get started, just wanted to say thank you to all of the new subscribers for coming and making either the jump from Twitter, finding me on YouTube, and kind of we hit 2K. That's a pretty big deal. Just wanted to say thank you very much if you're for all the comments, the likes, everything. And then without further ado, let's get started. So, last week's Lululemon play was a play not only off of technicals, but also off of the news. And the technicals you'll see here, but it's more importantly about this news. So I'll go ahead and pull up the news first and I want to show you. So last week, Lululemon Athletica disappointed investors ahead of the ICR conference, sending warnings of signals for the fourth quarter fiscal 2021. On concerns regarding the impacts of the new Omicron variant, management noted that Lululemon experienced severe impacts from the Omicron variant, which led to the elevated capacity constraints, including staff shortages and reduced operating hours in some markets. Although Lululemon started the holiday season on a strong note, it lowered its guidance for the fiscal fourth quarter to reflect the aforementioned impacts of COVID-19. So, what does that mean and what did that do? So that caused this huge gap down right here. And you'll notice up in this top, it's going to pop up in this corner here. So we had a high of 352 and it gapped down to 325. So that's the impact of that guide down. So we observed this action. This is the Monday, the 11th. We didn't take any action on it on Monday. We just let it react. Then on Tuesday, we start seeing, hey, it's right up near that gap down 350-ish level. So right at the open here, you see that it had a high of 347.5. So what we do, so we went right at 9:39 in the morning, right when the market's opening. We said, hey, we want to get some of these Lululemon puts. So we take them, gaps down again, and that's where we get our first exit. So we take those Lululemon puts, we ride them back down. How far does it go? It goes down to a low of 337, in the money a little bit, get a nice cash out there. But there's more that goes to it because it rides back up again later in the week. And we hold onto them throughout that action. So you sell half, so you get that nice gain, and then you just sit and then we're just waiting. So we know that if this 352, if it holds and closes over that 352, it's likely to have shaken off that news. But here on Thursday, where's that high? Hits the high of 355, but then it starts failing again. So the impact of that earnings, the low, 323.25. So we think there could be up to 17 points of value to the downside there, because that's under 340 minus 17, 323.50. So we had to wait a few days after, but what happened is we were able to ride that whole wave down up over 1,000% because that breakdown happened again to retest those lows. So I sold out because it was getting near the end of the day for 11, up 1,000%. So if you would have had 10 contracts, you took them from $100 each. Now you're selling me for $1,000 each year. It turned $1,000 into over $10,000 on just that. But they kept riding down. Like you could have got, there was asked there for 14, so by 11:39 in the morning. So you rode that wave back down. So what's more important to know here is a lot of people want to trade tons of different stocks that just work on technicals. The technicals of this would have told you to give up as soon as this high broke here, that 352. But you knew that the news was bad. The news is more powerful than the technicals. News will always trump technicals, but use technicals to help you navigate the news. So that's why I always practice and preach. You don't need to know a ton of different tickers. You don't need to know how every single name works. You need to know how a handful of names work, and you need to know how it works well. You need to be able to tell someone why this news impacted, what the impact is, how you can shift and react to what's going on. Like, it could have been a good dip by there at 323, but they just said in their speech, hey, we're going to guide down. It was a tough quarter. This is bad. And then here, even a week later, it's 330 was the close today. So you don't know how the jump is going to come back up. You can assume that it's going to be a lot of chop. It's going to be a lot of mess until after this quarter comes up, because you have to see how bad it really is. So with that being said, I hope this kind of shows you what I was looking at here. I was looking at, just to summarize it all up in a few quick sentences, looking at the gap down level, which is here. Took it when it came and was revisited the next day, rode it down, got my double. Once I had my double secured, I was able to hold the remainder of the position the rest of the week just to kind of see and wait what happens. We had a retest of that gap down level. It failed again and revisited near the lows. So we went down to 325 as opposed to 323, so pretty darn close. But it's that ability to understand the stock is how you can hold these positions for massive gains and really take the full advantage that options can give you. So with that, I hope this video helps you, and be sure to leave a comment, subscribe, and thanks for hanging with me. See you next time.